everyone, and welcome to this very special show of BNSN on campus. I'm Avan Dabash. And yes, we've traveled all the way to Singapore, and we're at the sprawling campus of the SP Jain School of Global Management right here in Singapore. Joining me today are, of course, the students of the Global MBA as well as the Masters of Global Business students who are going to be quizzing today for the first time the fund manager and founder of Helios Capital, Samir Arora. He's a market veteran who needs no introduction. We'll be talking about navigating the stock markets, the nuances of the markets, and building a strong portfolio. So Samir, thank you so much for joining in. Welcome.
Pleasure.
I'm going to start off by just understanding the overall market standpoint. Just a few months ago, you said you were waiting for the foreign institutional investors to return to the Indian markets, and that would inspire confidence. Looks like your predictions have come true. So what's the next prediction?
No. First thing is, thank you very much. So what I was saying was that, once FIIs in India are selling and selling continuously, which they were doing for 6 months, you really didn't need other analysis. You didn't need to know why they are selling, what is the big picture behind it, because that was a summary of their actions, which was that we cannot handle around about 400 million a day of selling day after day. But from June onwards, it has reduced to a trickle, and from July onwards, they've been buying. And generally, they have been buyers all their life. I've been myself an FPI investor for 25 years. And from 94, there have been only 4 years in which collectively FIIs have sold, or FPIs as they're called now. Yeah. So it was obvious that plus minus a few months, they will start. And once they start in this period when the domestic guys had been holding on the market and basically handling the foreign selling. Once the foreign investors return, the Indian investors are not going to give it back so easily. So their re-entry will be costly in some sense.
Pallavi, you have a question next. Go ahead.
Yes, sir. Hello, sir. My question to you is, what are your tips to make an inflation-proof portfolio?
The golden
First of
question.
all, nobody's supposed to give tips. And second is, nobody knows the answer to this. If you're talking about equities, in general, they are supposed to be, best hedge. We have seen that this year, gold didn't work. Why it didn't work? Because maybe people think that if interest rates go up, then the cost of carrying gold, which has no interest being earned or nothing being earned, that cost is high. Till last year, we thought that the people who were trying to protect inflation were buying bitcoins or whatever. So beyond a point, nobody knows exactly, but the general answer from our point of view is that equities in general, over time, have done better than every other asset class, whether it is debt, it is gold, property, and it is liquid. So therefore, in general, I would say buy equities anyway. Whatever you do in the end, I will conclude equities is the best thing.
Okay, so equities is the way to go. But Samir,
for the long run. For
the long run. And you recently as well in an interview in ET Now spoke about how banks are going to be the key sectoral driver versus the IT space. What's the rationale behind that?
So the rationale is that in general, if you look at the last few years, the financial sector in India has not been re-rated. That means its returns have come more or less in line with its earnings. And in fact, the biggest bank, HDFC Bank, has actually been derated, you can say, and one of our bigger holdings. So in general, you don't feel coming in that you're coming at some all-time high prices and stuff like that. For IT, the real risk only is that IT is the most connected with the US market and the US issues. And if there is a recession, why go and deliberately sort of head into that where the pressure on US corporates will be high for them. And if there is pressure on them, which means they will have less of discretionary projects trying to meet their own EPS targets, whatever. So in the big picture, we always believe, and we have still a lot of IT, but little less than the market, is that IT is that India is the back office of the world and you can't live without it, blah, blah, blah. But in the very short term, there is no need to deliberately go into the sector which is the most exposed to the current problem area, which is whether the US has settled down or not.
And you believe IndusInd Bank is emerging as one of the strong contenders within banks?
That is one of our smaller holdings because
so what are the others?
Big ones are HDFC Bank, ICICI Bank, State Bank.
Okay. Dipesh, you have a question?
But
for
we have IndusInd also.
Yes, yes,
But much
smaller.
smaller, maybe 1/3 of any one of them.
So, sir, in recent time, we see that new age business are started listing on Indian stock exchange like Easy My Trip, Nika, and some QSR companies are also been listed. So, according to you, which sector is more promising, or which sector we should study in coming time?
So you should read a book called The Platform Delusion. It's an absolutely brilliant book. And you will see whether some of these new age guys are really platforms or not. And we think that out of these, so the platform means that the two sides, the buyer, seller, should come sort of on their own, like YouTube. The viewers are coming and the content creator is coming. And they should come on their own, and there should be multiple people on both sides, right? So for example, if there's a company which we call platform company in India, if it is selling insurance products or mutual fund products, it's really not a platform, because on one side there are some 10 companies. Okay, other side there are millions of people who may come, but okay, it's a small platform. But we think, for example, Zomato is a genuine platform, because there are thousands and thousands of restaurants and thousands of this thing. And in those businesses, it is not easy for you to start. A Nika business, anybody can start, because a new company can start it and may say that I will only sell 100 products, and even if I get 20 crore, 50 crore of sales, I have started this business. But you can't start a Zomato-like business like that. You have to do it where you have to aim for some 20% market share or 15% market share, because you'll need lots of riders, lots of restaurants. So you can't randomly come in and do it. And definitely 5 people can't randomly come in and do it. A Nika type business, I think 10, 20, 50 people will be doing already, and 50 more will come, because it looks relatively easy. And you know, Jio or Reliance will do it, then Flipkart will do it, then Shopper Stop will do it, then Glam will do it, then Purple will do it. Everybody can do it. But you can't do in some of them. So anyway, at the end of it is we have only bought one stock, that also only last week, which is Zomato.
Yeah, you know, so I wanted to ask a little more
We don't have any of the others.
Okay, so only Zomato, and you've recently...
And that also now only, yeah, after the results.
So what's driving that conviction? Is it because, you know, everyone's asked the founders in a certain sense to wake up and smell the coffee, take cognizance of the cash burn, you know, rise to profitability? So it's all of that. So you think that
they seem to have, because they were initially putting money in other businesses, which they say they are not putting now. And the numbers of this quarter were good. And to me, it does look that it's a bit addictive kind of a thing, in the sense that, and they presented it in their presentations also, that if you joined Zomato in 1 year, then next year your order frequency is some 1.3 times. Then the next year it is some 1.5 times, etc. So if you see whoever joined in 18, how they tracked 19, and they do it themselves, I mean, they presented in their reports, you can say that even if today they didn't do anything, the frequency increase of the current guys on the platform itself will drive, you know, some 20-30% type of growth, and then new will join and whatever. But basically it looks like a business which has now finalized to Swiggy and Zomato, and it's not easy for a third guy to... If somebody came in, then the story is again over for many years.
Okay, good to know about Zomato. Let's get in our next question.
Hello, sir. My name is Karan. So my question is, like, we are talking about Zomato. So there are other unicorns which have recently listed in the Indian stock market, which have acted as wealth eroders. So like, what are the key factors an investor
including Zomato?
So like, what are the key factors an investor and a promoter should keep in mind before raising the funds from the stock market?
It is not easy to make money off these companies actually. Because now these companies, the sales are being not done by the company, it is being done by private equity investors, financial investors who are like us only. So they are not there to leave anything for you on the table. Previously, when a company would directly go public and not have these financial investors in it, it was much easier, because we used to convince them that you are only selling 10%, you still have 90%, and you worry about the overall pie and all that. But now each company has 20, 30 investors, all financial. And there's one, the guy who founded the company, whose stake is by now 5-10%. And he's not in the seat for this, and he's mostly not selling. So that is a tough thing. And there's another angle which is negative, which is that these guys have mostly 6 month to 1 year lockup. And then they all may sell. So first of all, it's not easy, and we are not saying that you should buy new age businesses, particularly in India. They have just come out too aggressive, and the valuation increases have been too high leading up to the IPO. We are not even looking at any other, just we bought a little bit of this just because we were also getting bored in life.
Okay, some pearls of wisdom when it comes to choosing the right profession from Samir Arora. But tell you what, he's also going to dole out some interesting stock market themes. Let's slip into a very quick break right here on BNSN on campus. We'll be right back. Welcome back. This is Buy Now, Sell Now on campus, and we're at the SP Jain School of Global Management. We're in conversation with leading fund manager Samir Arora in the classroom with all the students who have a lot of questions. But Samir, before they come to you, maybe I'm going to ask you a question on the cyclicality theme. And, you know, given the way we've seen global commodity prices fare, that was a huge concern. Things have softened significantly from that standpoint. So in light of that, A, what's been your view on the earnings and this entire theme?
So actually that is what has given us the optimism now, because the new fear was that inflation will be higher for longer, and in June when the commodity prices fell and then oil fell and then this semiconductor issue seemed to be a little bit resolved, and all these US company AMD and all were saying that there might be a glut. Actually, so we are not a commodity producing nation, and I'm talking about India. And therefore, for us, it is better if commodity prices are lower rather than higher. You know, Brazil and all these, Russia and all can enjoy their moment in the sun. But we hope that, and also if China is slowing down, and today also their numbers have come very slow growth, then it's good for India in that sense. So we don't have, and generally also we don't invest in commodity sector because it is just too difficult to predict prices. And you don't want the stock market investing to be about predicting commodity price. That is the toughest part of this thing. Because their price determines everything, not volume, not whether it's a profitable business or not, which of course at some level you have to see that also. But the extra returns come if the price is up or down. And that is too difficult to do.
Why don't we talk about EV? But you're not entirely convinced that the EV story can really play out as well as it has globally in India, correct? What's the view on
No, it is not going to play out globally also, except one Tesla has come, but it's not going to play out. It's a big picture, this thing. So let's say there are 20 auto companies in the world, actually whatever, 40, 50, India has maybe 5, IC engine companies. Now you tell all of them that now you all have to convert to EV to stay in business. Nobody can say, I will not do IC, I will only make, I will not make EV, I will only make IC. So now all these guys convert, spend billions of dollars, and now they all have electric vehicles. We have separately, broadly not read from anywhere that when there are EV, when there's a transition, that the number of cars sold will be more. So now the same 20 guys now all convert to EV. They have spent billions of dollars. Somebody's EV car will be better. Somebody's will be worse than their current this thing. So now what? You spend billions of dollars and there's no change in the market. But unfortunately, there are some 20 random guys who were not doing IC cars and were not interested. Saying EV, oh sorry, we are also interested. So now suddenly 20 new guys came in. One of them was Tesla. So now there are 19 more or 10 more EV guys coming in addition to the current guys converting. Please separately tell, once again, nobody is saying that the car sales will increase after you go to EV. So now what did you do? Now 40 guys are spending when there were only 20 guys in the business. And one guy will win. Because somebody's new electric vehicle car will be better than his current IC car, and therefore his market share will change relative to somebody else. Oh, who's to say today? In absolute, across the industry, there has to be a massive destruction in value. There has to be. That is a trade-off with the climate and all, but I'm talking from an investment point of view, what can you do? There is no choice.
Okay, let's go ahead with your question.
Hi, Samir, I'm Krishna Bhandarkar from the MBA batch. My question for you is, with the US recession and the next current trends for the next few weeks, how do we as Indians position ourselves in the Indian stock market?
First of all, you're not supposed to position for the next few weeks. That I can do for one of my
Can sit.
accounts, but generally slightly longer term. So the longer term is that if you look at the Indian market, broadly speaking, it has been going up around 14% per annum for like 25 years. And the US market, if you see its returns for the last 20, 30, 50 years, is like 8, 9%, but that is in dollar. So that also reconciles with our 14% rupee type return. If you look at it as compared to the fixed income or the debt returns of the same market, so in India, the 10-year bond is some 7.3 or something. So you add 5, 6% equity risk premium, also becomes 13, 15%. The problem is that you don't get it evenly. Actually, in the last 25 years, the market is up some 14 in MSCI India index, I think. But there's not a single year where it is between 12 and 16, or I think even between 11 and 17. But net is 14, you look at it 5-year, 15-year, 25-year kind number. So you are supposed to position that you are too young, so you don't have to worry. You invest 90, if you have a job, after getting the job, then you invest 90% in equities and every month add whatever savings you have. There's nothing to do in this. It is too easy. Plus, if you are starting,
Samir, if it was too easy, we would all be standing where you are.
No. That is, you will give me the money now. I have to manage. I mean, he has to do his part. That is the easy part. So the second thing is, which is a story which all the fund managers tell, but I may have thought, no, I didn't think of it, everybody knows, that you're not supposed to think, you're not supposed to hope for market going up. Because you have to invest for 15, 20 years, 30 years. Why do you want first day that you made your first SIP installment and you want the market to be up? So you will be happy when the market is down. You shall be, you should be. And then over time, as you are about to take out, it should be at high or whatever, but broadly you won't know anything like that. But big picture is nothing to do in the short term other than to broadly invest. Now we also back off. If there is at that time something happening in the world which is bad, if the war, we may say that wars don't matter in the long term when looking in hindsight. But if you're on day 2 of a new war, you should wait and say what is happening. Similarly with this inflation, we say that broadly we can't predict it. But when Federal Reserve comes and says, I am way behind and panicking or sort of, you can also wait 6 weeks for them to sort these things out. But broadly, there's nothing more to do from your side.
Okay, let's get in a question from the young lady up front. It's on.
Good evening, sir. I'm Samir Arora. My question to you is, what has been your biggest learning and biggest regret in the stock market till date?
No, there are many. So if you take regret as being a mistake in terms of losing money, oh, many. But if I thematically put them together, it was to invest in infrastructure sector. Because in infrastructure sector, which is mostly the customer is the government. So what happens is the approvals take time, then the bidding is at the lowest because there will be 10 bidders who will be bidding. And then if you're making a road or making something and your approval doesn't come, some final this thing doesn't come, or your payments get delayed. So that has been the toughest for any corporate to control. And if you see all the big problems in India happened with corporates in the infra sector, because either their port got stuck, their power plant got stuck, and we also had 1 or 2 of those out of the 20, 30, but basically you lose 50, 60%. Because the stock you can still sell, but the companies in the end have lost.
Where's the time that you're patting yourself on the shoulder for, I'm sure many times, but something recently maybe? She asked what have been the regrets and also a huge learning.
Oh, no, huge learning. That is a learning not to invest there.
But that's okay. I thought that was a regret. Okay.
No, whatever you want to call it.
Okay.
Because what works, there's nothing to learn. You just enjoy it. You worry about things which are not working.
Okay,
but broadly, our biggest money has been made. No, my money has been big time has been made because I've been from day one, even personally, an investor in HDFC Bank. Recently, we made in last 2 years. In last 2 years, we made some 4 or 5 times in Dixon Electronics. Previously, we made some 70 times in Bajaj Finance.
Yeah.
Then more recently, this year, we made 70% in Lemon Tree. But you know, if you have 25 stocks, something will do well.
Yeah.
So we have to see them going up for like 5, at least 3-5 times. That will be fun.
There's also been Vedant Fashions, Campus Footwear.
All those have done, but they're very new.
No, so I'm
But
just
we made some
asking,
40,
so is there
40%
anything else like with those kind of consumption-facing businesses that you guys would look at?
No, we would if there were new companies, but generally today we are quite bullish on consumer because we basically invest only in 3 themes, which is financials, consumer and IT. But these days we are not buying IT. So basically it leaves financials and consumer. And in consumer, the small ticket consumer we like. We don't want to buy consumer durable type companies because there is too much competition. And in this work from home time, people have upgraded and bought their new TV, fridge, whatever they want, computer. Now we were only buying hotels and eating out and QSR. And these two because they were new companies. And the initial growth rates will be like very high, 30-40% types rather than 10-15% which in the end consumer companies grow at.
Okay, do we have any last questions? We'll get that from...
Yes.
Hi sir, this is Piyush from MBA batch. My question to you is, from the current scenario, like which stock should we invest in? Is it the one which is giving more profit, or is it the one which shares dividend regularly, or the both?
Well, dividend comes from profit. So you are not going to get dividend without profit. But this you invest in our fund, we will do a better job.
Do you have a question? Yeah.
A very good evening, sir. This is Ankita Bhandari. So my question is, what method or strategy do you generally employ to hedge your clients' funds?
So normally people don't hedge because we are a hedge fund, so we hedge a little bit, but 90% or 95% is not hedging. And you are basically giving money which is to be invested in equity. And therefore we are not hedging, but within that we might buy this stock or that stock. But in my offshore fund, I run a long short fund where we short stocks. So that little bit of hedging of 30-40% we are doing all the time, but we are also not hedging the currency, for example. So the Indian rupee depreciates, our NAV will be affected by that. But that is a cost of sort of doing business in the sense that Indian rupee loses about 4-5% per annum. But after that, the dollar return should be enough for making people happy. And to tell you just one line on that, forget about a fund. The Indian market, just the market, in dollar terms, has beaten Warren Buffett over the last 21 years. So when we say, oh, Warren Buffett has made a lot of money, our index has beaten that. And then some good fund managers have beaten that market. So the point is, the market, even though dollar is not being hedged, is part of the game. And stock market hedging, 90% of funds are not doing. Even we in our long only will not do. That is just the way it is.
All right, from investment strategies to sectoral themes to even marketing his own fund, Samir Arora has done it all. So thank you, Samir, for joining us today. And to all of our students here, thank you for your lovely questions and, of course, for taking our time. A big round of applause for yourselves. And with that, we'll wrap it up on this edition of the show. Thanks for watching.